We are looking at S&P 500 mini futures. I just sat down to do my analysis and I saw this double high probability setup, so I'm just setting up my chart. And the setup looks so good that I was forced to immediately take advantage of it. What is the setup? Well, I can see that we have some consolidation. We have EMA, consistent price swings up and down. We actually have new low here, and we have new high at the top following the short-term trendline rule. We have spike below EMA, and this downtrend right now is expected to get new extreme. Okay, new low. We have a new low here of this push down inside the channel. First attempt to sell, pull back, second attempt to sell. It's right at the EMA, it's right at the key entry point. But this is also a new high, first entry long, pull back, second entry long, failure. So I don't only have second entry short, but I also have a failed second entry long. This is why I'm acting on this so quickly. The structure is fairly clear, everything played out, and this downtrend is new low. So there's a big chance we're gonna at least exceed this lowest low prior to break. So I jumped in with 9 contracts, leaving 1 contract as a runner, scalping for 2 points. Stop loss has to go 1 tick above the signal bar. And once again, this is double high probability setup. This is second entry short and also a failed second entry long. Signal bar was fairly small, so risk is not that big. Going for 2 points, and I'm gonna keep the runner around these lows. Alright, so we managed to get the scalp. It was fairly quick, double high probability setup. This is the 1 leg break, so let's see if we can get the runner. It is just a bonus. Alright trainers, our runner just got hit. Alright, so we can see that there is some bullish imbalance developing. Yesterday's bullish bias is kicking in. We barely got the scalp. There was new low attempt tested. I was expecting to get at least the technical new low, but bullish imbalance kicked in, so I definitely won't be looking to go short. In fact, price actions right now slowly but surely creeping higher. So there is more bullish bias now. You can see we have series of high lows. This is important. Okay, I'm resuming the video. We had very nice setup. I unfortunately looked away for a bit and I didn't even notice this setup in time. So this is a mini second entry long, new high, first entry long, second entry long. This uptrend needs to get new high. You have the bullish imbalance as we talked about. So this is a great high probability setup, second entry long at the EMA. I just didn't notice this in time, but I'm not looking to sell because we have bullish imbalance. I may be looking for some bigger spike in a channel, something like this, but there's definitely bullish imbalance, and this is exactly where you want to go long, where the correction is ending and a new push phase is starting. So decent setup, and now we have a new high, but we have bullish bias. I'm not going to be looking to sell just yet. We can break higher. So we have nice uptrend working higher. Of course, you cannot be thinking about selling. You can see all these sellers are getting trapped every single time. I'm just waiting for price action to correct to the key entry point, and I want to go long on a second entry long. Hopefully we won't get overshoot, but I can make it even a little bit steeper, no problem as of right now. This was really great second entry long. Look at the runner this would have generated, so fantastic setup, and I'm just waiting for additional pullback again. Okay, we have a lowest point of this correction. We have a first entry short below EMA. So I'm considering failed second entry short above the EMA, failed second entry short to resume a brand new push phase because the trend is up. So I want to catch the beginning of a new push phase by respecting the correction, waiting for the resumption above EMA, and a failed second entry short above the exponential moving average. Okay, so the market corrected. This uptrend needs new high tested. So I'm looking for the push above EMA and a failed second entry short. If we're going to push too far up, then I simply need to wait for second entry long at the EMA. But this uptrend is new high. Looks like downtrend played out. I'm drawing small trend range, but I need to see price action right now continuing bullish. So either great failed second entry short above EMA or some mini second entry long. So you ended up having broader two-legged pullback, measured move reached. You have a sharp spike back above EMA. So I'm looking for second entry long at the EMA because now we're about to test the new high for the main channel. There was no setup to go long. We broke below EMA every single time. So market needed second leg down. We had a failed second entry short here, which would be good, but it's not at the EMA. So I need to wait for the second entry long now. Clean leg working higher. Alright, so this is a little bit unfortunate, but we didn't get a setup at the EMA and we already have a new high. So perfect price action, 2 legs down. It's a shame this failed second entry short wasn't closer to the EMA, because otherwise this is a perfect failed second entry short to once again capitalize on getting the new high. So this is not ideal, but this is simply part of trading, breaking new high. So I'm going to pause looking to go long for a while, and I have to wait for more information to see what is the next market cycle, because the main uptrend played out, the short one played out as well, and let's see what's going to happen next. I came back from my break. I can see the structure is not really that established. I'm not particularly looking to go short because we are working higher the entire day. But at the same time, the only good channel that is established right now is this weak channel working higher. Not really that great. So I'm more inclined to be buying rather than selling, simply because we are working hard the entire day. There was potential to take double trap right here just locally to ride it to new extreme. But other than that, structure is not super established. So let's see what's going to happen. Alright traders, I'm going to wrap it up with my one trade. So this is the overall structure for today on the ES using price action. By using price action rules, we can definitely predict where the market is going to go and identify high probability setups. As you can see, we already started with higher lows present in the market right after this pushback above EMA. So from this point, you have bullish imbalance, you have bullish bias. So you're mainly thinking about buying because this leg down was supposed to have followed through, but it didn't. This means the bias is stronger on the bull side. You have push above EMA, which is once again resuming the main bullish bias. This uptrend is new high, and notice you have new low here, one attempt to test new low, fail, second attempt to test new low, and failed again. It's a great second entry long at the EMA. Also, it is visual continuation of the failed second entry short because we cannot go long above this orbital bar. So this is visual failed second entry short, second entry long, uptrend is new high, great high probability setup. Actually, we generate a significant runner. Then, as market keeps going higher, I need to locate a brand new channel, which is fairly easy because I have nice market geometry over these lows. A lot of swings here. The whole time I'm looking for second entry long at the EMA, but market just keeps going higher. We can't even pull back to the EMA, so the only way to enter is basically at the bottom here, and then only manage the runner if you're holding the runner. The market is correcting, so naturally I have to once again, every single time, draw channel even for the correction. Break a new extreme, very tiny though. But when the main trend is bullish, we draw against the main trend corrections tight. Can be easily draw wider, so a little bit confusing. I was really looking for push above EMA. Definitely cannot go long directly into EMA. I need to see price action above EMA. Now this second entry long is okay-ish enough. I still skipped it because you're still below EMA. You're also quite wedged. I don't really like it, but because it is bouncing off the main key entry point, I can see some traders trying to take the risk here. Especially because you can see this nice bearish bar. A lot of sellers got trapped selling right into the main key entry point while the trend is bullish. So you're taking the other side of their orders. They got trapped. This is the key entry point. But I really love waiting for the push above EMA and some high-low confirmation setup. It would be breakout pullback out of this consolidation. But by the time I get a high-low here, it's once again not full at the EMA. Too far up, horrible bar. So I can't really take it. New push phase was established. But this is what price action trading is about. Use market geometry, predict the key entry point, and take advantage of the push phase. Then we have significant correction working lower. And once again, you want to see the push above EMA. That is the resumption that the buyers are about to test new high. Okay, especially if you can make a case for a slightly wider channel. If the break is tiny and the leg is seamless, you can see we broke below EMA here, broke below EMA again. So you're not arguing with the market. You're not going long because we clearly cannot stay above the EMA. That's a sign that the market is still quite bearish. There was indeed a little bit bigger channel, brought to like a pullback, perfect price action. You actually have, this is what we call counter trend triple test, one bounce, second bounce, third bounce. Right into the EMA, but this is way more advanced. If you're a novice trader, you're going to get burned picking bottom like this. But if you understand the context of what's going on, it makes sense. You have two legs down, measured move, uptrend needs new high, following the trend line rule, downtrend played out. So you're riding the triple test back to the EMA. The safest way how to play this if you're a beginner trader is to wait for the push above EMA and a failed second entry short. Micro double bottom can reset, first attempt to sell, push above EMA, and a second attempt to sell. This would have been a great trade, but once again, so far from the EMA, not even close, not even the tail, so we really can't break the rules here. It's really too far up. It worked perfectly, but we just didn't get a chance to enter. And then I would like to see second entry long at the EMA, which never formed. Break a new high and a brand new market cycle can emerge. So I'm pausing, looking to go long. There is no way for me to sell. You can't even get a failed second entry long below EMA. You're still above, so nothing here. Break new low. I have a brand new push down, so I'm going to redraw a brand new downtrend because this one played out. New low, first entry short, second entry short, I cannot sell below bull bar. And this is double trap, decent bar. The structure is not super clear, but you can play the short-term channel. You can play local double trap. It's such a nice bar at the EMA, at least for scalp. We are scalpers mainly. So decent double trap to consider. And by the time you get this push above EMA, once again, you have to ask yourself why there is no bearish reversal. We are once again back above EMA, so this is a good sign that the main bullish bias, which is the main bias for the day, is kicking in. And you would consider actually second entry long, new high, first entry long, second entry long, new low, first entry short, second entry short failure. But once again, it's not at the EMA. Okay, it's a shame this is not at the EMA. Double high probability setup, bullish bias resuming, but it's not the EMA doji bar too, so we can't really enter. And by the time you're already at these highs, you can't really go long this far up. You're far from the EMA with the body. I cannot go long. I cannot really sell, too congested. Nothing here breaking new high. Aggressive. Actually, this is felt second entry long, excuse me. New high, first entry long, pullback, second entry long. Failure because this uptrend played out with the break push to new highs. This is a felt second entry long, and then market was about to close. So it was boring price action, very predictable though. Nothing out of ordinary. Everything super predictable. This part right here was super choppy and super boring. Nothing much to take. There are only a few good trades, a couple more aggressive ones. But if you actually understand exactly what is happening, if you're not lost, and if you're predicting where the market is going to go correctly, that's actually a good thing on your part, because it's always a good sign that you understand what is happening, okay? Don't be too upset when there are not that many great trades. If you understand what the market is doing, if you understand the clues the market is giving you, and you're not lost, you know what to look for. Just because the setup doesn't form clean, that doesn't mean that you did something wrong, okay? If you are anticipating felt second entry short here or second entry long, you're on the right path, okay? You're reading the structure correctly, you're putting the pieces together correctly, and this is how you start. Because next time you're going to get a good setup, it's going to be close to the EMA, and you need to pull the trigger and take advantage of. So even if you didn't take a trade, for example, today, you still need to sit here, you still need to get the experience, because next time, the setup will form a little bit better and you need to be ready to take advantage of it. And that's how you're going to make it. So predictable price action, few decent setups. I hope you got some of those setups. I'm going to wrap it up. I'm going to talk to you next time. Good luck in your trading.